What's going on, YouTube? This is Dave's Daily Trades, where we cover daily AMC technical analysis, price predictions, and of course, bring you the latest greatest news. In today's video, we're going to be taking a look at haircuts. Yes, myself included, I need a haircut, but not those types of haircuts. We're also going to be taking a look at some breaking news that came out today, where Citadel Securities is jumping into a massive call option position with AMC, and of course, guys, we're going to be going over quantitative easing, the new DTC rule change, and much more. But without further ado, we're going to jump right into the intro and then hop into the technical analysis. And we're back. All right, guys. So for today, of course, day is still going on, and we are just about 5 minutes from close right now. Currently, not the greatest day. We hit a low of $34.59, and really for the past couple of days, we have just seen straight sell-offs. Now, of course, we did post a video yesterday where we were trading in between this channel between $36 and $37, just about $38. But have since have broken that and now have come down below 35. Now, of course, some of you must be asking yourself, where does this end? Now, really, my take on where this may end is, I would say the absolute bottom, in my predictions at least, is going to be somewhere around this $32 range. I currently have this support range drawn at $32.20, which was last hit on 8/20. That acted like a very strong support, and after we hit that, we had massive moves all the way up to $52.79. So, of course, I do believe that Thursday, tomorrow, may be a bloody one, guys, and that's totally fine. And we're going to go over why none of this really even matters. Of course, technicals are always going to be something we need to take into consideration, especially when volume is low. We want to see good technical setup so day traders, swing traders, and even momentum traders hop into this position, pick up volume, because of course, that is going to help us get to where we ultimately hope we end up in the long run. But of course, we're not going to dwell on the charts, guys, today. We're actually going to be taking a look, in my opinion, at something much more important. And we're going to start off by just taking a look at the new DTCC filing that just came out on October 25th, just a couple of days ago, 2 days ago, guys. Why is this important? Well, we're going to jump into exactly why that is. This Reddit article, of course, this will be linked in the description below. Definitely take a read through this. The biggest thing it talks about is this new DTC haircut notice that just came out 2 days ago. The most over-leveraged market of all time, which, of course, we have been talking about for months on end. We're not going to beat a dead horse with that. We're going to go into the Fed taper and why everything is coming out right now. Now, of course, I do want to start with this DTC haircut notice, which is right here. Of course, this will be linked in the description for you all to take a look at and read through. This is, I don't even know what, 7 pages long. Great snippets of information all the way through this. But really the biggest thing is why. The why of what is going on right now within multiple different markets, sectors, and regulatory bodies. So what the hell is haircuts? Not haircuts. I know I need a freaking haircut, but collateral haircuts. So anyways, the new notice modified the collateral value for securities as follows. AAA to AA2 / AAA to AA will receive a haircut ranging between 5 to 35%. Those rated below AA will receive a 100% haircut. So we're talking about a 100% haircut. That's quite a bit. Of course, if we're talking about real haircuts, you're going freaking bald at that point. But what does this mean for you smooth brain apes? Well, here we go. In very simple terms, if you want to take out a loan or a margin to go short or long on a security, you need collateral to secure the loan. Very simple. So let's see you have $100 worth of Tesla. And of course, Tesla has been going freaking crazy. All-time highs were posted. And want to take a loan of $100 and you'll load it into, instead of GME, we're going to go right into AMC here. The person willing to give you money may say, sure, but you have to give me $25 worth of collateral just in case your bet goes bad, since it is a YOLO. So you pledge $25 of your Tesla security as collateral. If the bet goes bad, you can't have my Tesla. Very simple. Anyways, but collateral has to be proportional to its value. So the person borrowing you money would not take $25 of Evergrande security as collateral. You know why? Because Evergrande is shit. It is pretty much worthless at this time. So, of course, if, you're taking this YOLO, you post up a shitty bond, stock, whatever it may be as collateral, they're going to be like, hell no, I'm not going to take that because it could be worth shit. And, of course, Evergrande is worth nothing right now. So this new notice that's coming out says anything below this AA credit rating is practically worthless as collateral and cannot be posted towards collateral requirements now, which is very, very interesting. And this is where it gets super detailed here. So we do know that Citadel's long position is in Tesla. What happened with Tesla over the past couple of days? Shot up to all-time highs, currently trading at somewhere over $1,000, which is insane, guys. And of course, for you Tesla fans out there, I'm sorry, you're not going to like this part. But what's going on with Tesla's credit rating? Well, right now they're BB, which is considered a junk bond. So when Citadel gets a margin call due to market downturn, for example, they will say, we would like you to meet this margin call with our Tesla collateral. The DTC will say, no, absolutely not. I need something a little bit more secure. Okay? And that's exactly what this haircut is doing in the most simple terms. So, of course, what about our own bonds, Citadel may say? Well, of course, the DTC is going to say absolutely not because your credit rating is a BBB and we're not going to accept that. We need something that is going to be a more safer collateral requirement. And that is exactly why those AA and AAA securities are the only ones that are going to be able to provide some type of requirement towards those margin accounts, either on the long side or the short side. So very interesting. And actually, this new rule is beginning on October 29th, 2021. And the settlement date for this is going to be November 1st. And of course, everyone right now is extremely bullish on November for AMC and, of course, for the various other meme stocks. This just comes out at a very ironic time, in my opinion, as well. Now, of course, part 2 of this, we've covered all of this information so many times on the channel. Of course, this market is a ticking time bomb. It is over leveraged to the max, and we are still hitting all-time highs week after week, month after month. But why? Of course we know why. It's because liquidity. Liquidity was just given to everyone, every single market maker, the banks, you name it. You're getting money like crazy. And of course, what happens when money is that easy to come by? Well, people are going to take advantage of it. People are going to over leverage. And that's exactly what has happened to the market this entire year and a half-ish time since COVID really hit. So that, of course, does not lead to a very stable market. And you have very over-leveraged market makers, banks, hedge funds, you name it, out there running wild with this easy money that has been coming out. So the big thing and the big takeaway here is once you have this collateral haircut that we just talked about, you really are going to need to change the way you're using that leverage in what securities you're actually using. Now you're going to have to use the AA and AAAs and no more junk bonds or junk securities that you can use to meet these allocations. And I hope you guys are really keeping up with this. I know this is a lot, but extremely, extremely important. Now, the portfolio reallocations here. Really interesting. Last night, there was a lot of people on Twitter, Reddit, Discord, you name it, talking about Berkshire Hathaway jumping up 51%. And I believe it was somewhere around, because Berkshire Hathaway currently trades at like 400,000. It was somewhere up around like $624,000 per share. But of course, I do believe that this theory over here has since been debunked. Correct me if I'm wrong, guys, but that was just the ask for the security at the time, which just drove up the stock price. But of course, that was never executed. And today, as we can tell, it is back down to its regular buying. But really, the third piece of this story right here comes with the Fed tapering. Now, of course, this has been delayed, and kicked down the road time after time after time again. But now the Fed is starting to take this very serious and wants to begin starting this tapering within the next couple of weeks. Current date and current talks, of course, we don't know this for sure, but they do want to start this in the middle of November. Why, you may ask? In my opinion, their inflation. The inflation talks have been running rampant. I mean, look at gas prices right now. That tells and really paints the perfect picture for inflation. So we have things going rampant. Prices are going through the roof. Wages are going crazy. And the Fed now has no choice but to stop this. They have to stop all of this quantitative easing and taper right now before we see hyperinflation in the very near-term future, which obviously hyperinflation just sounds like a scary word. It is not a good thing for markets. But anyways, this is a great quote here. I'm going to read this to you guys. Okay, we understand this, but we're still in a bull run. Everything is still up. There's no sign of market downturn. Bear run is just about to begin. And that's exactly it, guys. So all firms lower than a AA are about to be sold off, as they are worthless to meet margin calls for over-leveraged positions, like we just saw, and exactly what can explain the recent run-up in Tesla. Now, margin debt has never been so high. Of course, we all know this. And derivatives have surged. Derivatives are at a literally all-time high right now. I forget the exact, dollar value, but it is in the multiple $trillion range, which we have never seen before in this market. All of which has increased liquidity risk. Markets absolutely need to deleverage before any tapering, let alone tightening, can be considered. So what is this saying? It's saying you have an over-levered market. You have all these derivatives out there running wild. So before we can start tapering, because we don't want to have a giant risk to the market, we need some tightening going on, and we need to lower the liquidity risk and the overall risk in the market. The most important part, markets absolutely need to deleverage before any tapering, let alone tightening, can be considered. Wait a minute. Isn't that what the DTC notice is all about? Yes, absolutely. And that is where the haircut comes into play right here. So this is a step-by-step plan here. Deleverage the market, taper, and then tighten. Otherwise, inflation, you know what's going to happen with inflation. And when is the Fed going to taper? Well, of course, we talked about it. It could be this year. It could be mid-2022. No one really knows right now. But with the current risk and structure of the overall market, they cannot do it right now because it would lead to a catastrophic market event, which is the last thing the Fed wants. And of course, let's be honest, no one wants to see the economy collapse because of this stuff. But anyways, we're just going to skip through the rest of this because it really just sums up everything we have covered. I know I did a lot of talking through this, but like I said, this will be linked in the description below. But really, let's go over what exactly was covered and why this is important. So the Fed and the DTC have been in direct communication to game plan over inflation. Of course, inflation is going crazy and something needs to be done with it. The Fed told DTC speculation that markets need to deleverage, which is hence the new DTC regulation that came out or filing that came out, so the Fed can start tapering at ASAP. All of this means bear market is upon us starting next week. Bear market means margin calls. Margin calls will eventually become failed margin calls, called liquidations, and this means MOAS. Read that one more time. And this means MOAS. Get excited, guys. This is some really big freaking shit here. And who is one of the most over-leveraged firms in the world? You named it. Our favorite guy, Kenny G, running the famous Citadel Securities. Man, their PR team, they're really kicking themselves in the ass with this name because we really ruined their company here. But anyways, guys, this is some really big stuff going on right now. You throw in this haircut rule with the inflation talk and the tapering talk, and it all really starts to tie into one piece. And that, in my opinion, exactly what's going on right now. So, of course, we'll wait and see what happens over the next couple weeks. But I really think that this is going to start playing out slowly. But within a couple weeks' time, this is exactly the game plan that is going to play out. And really, the end game for many shitty hedge funds out there. And really the start for financial freedom for us apes out there as well. Lastly, I did just want to take a look and show you guys this article that came out. Citadel builds huge position in AMC call options. Well, isn't that funny? I actually put a tweet out today about this. Why is this happening? Well, we all know why. They know exactly what's going to happen. The algorithm pointing to the next leg up. Earnings expected to be and actually crush earnings. Crushed earnings equals FOMO, which equals the algorithm also pointing up at the same time. And it's all coming together. Be patient. Don't worry about this bullshit. Don't worry about this. If we go lower than 32, it doesn't matter. It absolutely does not matter at all. Personally, I had some dry powder left on the sideline, and I love these dips, guys. Keep them coming. But anyways, guys, that's all I have for today's video. Be sure to hit that like button, subscribe for more content. Peace out, and tune in for the next one.